Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra. Well, this is the earnings special edition, and our focus in this special edition is going to be on Samvardhana Motherson's earnings. The auto component maker has come out with its Q4 numbers. On a consolidated net profit for the January to March quarter, we've actually seen the profit has come in at 1,372 crores, which is a marked improvement from last year's 654 odd crore rupees. Revenues from operations have also risen about 20% to about 27,058 odd crores compared to 22,517 crores that were recorded in the same period last year. Operationally as well, we've actually seen an improvement, strong one, on the EBITDA front, a year-on-year growth of 42.4%. And the margins have also come in at 10.8% versus 9.2% a year ago. Now, to detail for us what really went well for the company in this quarter and what's the outlook looking like, I'm now joined by the top management of the company. Mr. Pankaj Mital joins in. He's the COO of Samvardhana Motherson. Also joining in is Mr. Kunal Malani, and he's the CFO of Samvardhana Motherson as well. Thank you so much for taking the time out, both of you, and warm welcome to you on Business Today Television. At the outset, many congratulations for the stellar set of numbers that you've reported in Q4. So let me kickstart this discussion with you, Pankaj. Do tell us and our viewers as well what really contributed for the strong growth in this quarter. Are you happy with it? And do you see the momentum continuing?
Thank you very much for having us here. Yes, we are very pleased with the performance which our teams have put in all across the world. As you know, we are quite a diversified supplier of various automotive products and some other areas now with different divisions, mainly supplying to the OEMs. As you would have seen in the past, after the disruptive forces were there, the resilience of the company, it being also a powertrain agnostic company with our products being supplied to all kinds of vehicles which are being made. The teams did fairly well and quarter on quarter have improved the performance, giving this very good performance in the last quarter. And for the whole year, if you see, we have done a fantastic performance and also very good book business with the customers, which is about 84 billion US dollars, which is growing. We are also setting up new greenfield sites, very well entrenched in the emerging markets. So yes, the board was very much pleased with the performance of the company.
Okay, Kunal, let me bring you in the conversation as well. You tell us, what really drove the growth for you in this quarter, and what is the outlook now looking like for FY25? What could be the growth figures that you could be really pegging in?
Look, I think it's been a great quarter, but I would really urge that we look at it from an year-on-year basis. And for the year as well, I think the performance has been very well. Do bear in mind, I think there are volatilities that the business has had over the quarters. A lot of that has been discussed with the customers, and some sharing of pain has happened, which has happened in the latter quarters. And hence, I think it is better to look at it on a year-on-year basis rather than on a quarter basis itself.
Okay.
Having said so, I think as we look ahead and having seen the outcomes of the business and all the support that we have received from the customer, we are looking at again doing hopefully an improvement to the current run rates as well. So we do see the rest of the year in FY25 also something we should be improving every quarter to what we had done earlier, and that's hopefully what we will achieve. In fact, if you've seen our presentation, we've also given you a sense of, with all the announced acquisitions which are yet to be assimilated, what's the revenue trajectory that we would be having in FY25 without considering any new inorganics that happen. And needless to say, I think given the balance sheet strength that we have right now, we are, and with the pain that is there, especially in the developed part of the world, we are inundated with a lot of M&A opportunities. So, frankly, we are well on our journey to achieving our Vision 25.
Okay. Could you detail for us any growth band that you can highlight for both top line and bottom line, keeping all these factors in mind? What could be a reasonable growth rate that you could be looking at for FY25?
Look, I would not go down the growth rate route. We're not giving forward guidances in that regard. We're giving you a sense of obviously some of the acquired assets which hasn't been assimilated. So obviously those start getting assimilated.
Okay.
We believe that the industry where it is at 90 million vehicles may possibly grow at a low single digit kind of a number. That's how we see the volume growth in the industry likely to play out. From our product line perspective, we do anticipate our content growth to continue growing. We are powertrain agnostic, as Pankaj mentioned. We also supply parts to EVs, hybrids, where obviously the contents are much higher, and as
Yes.
transitions happen, a lot of content of our products go in there. So I think the industry trends are favorable, so we should clearly be outperforming the industry.
Okay, let's get Pankaj into the conversation to have a better understanding on this as well. Of course, a lot like, Kunal is saying will depend on the assimilation of a lot of acquisitions that you've done. I will ask him again a little bit on that front, but from you, I want to know, there are three key ways that you drive growth from. One is the underlying industry growth that you see. Second is the number of clients that continue to grow for you. And the third one is, like Kunal mentioned, the contents per vehicle, which was also increasing as your focus increases on the EV and the hybrid bit. For FY25, where do you see the maximum driving of growth coming from?
See, we do see a very good growth in every area, as you mentioned, and more so, but there has been a lot of pain in the market. We are on a very good way to our 2025 vision, which is $36 billion, which we had set up in 1920. So a lot of M&As, as Kunal mentioned, which are on the way to, which have been closed but have not yet been brought into the fold in terms of our revenues, which have been mentioned here. But there are also a lot of possibilities of further M&As because of the pain in the industry. And we are very well poised in that direction as we have done acquisitions, brought them to normalcy, and have supported the customers in that light. So we continue on our journey with the customer supported, directed, or the guided acquisition strategy. We continue to set up greenfield sites to support organic growth and also the growth which is coming in due to the content addition. So it's an all-round direction in which we work.
Okay. So, Kunal, like you mentioned on the acquisition front as well, by when do you see meaningful contribution from these to start to contribute to your top line? What could be the peak potential that you're looking at from the ones that you've already closed, in the long run?
I don't know how to define long run. But look, I think all the assets have been at the behest of the customer that we have acquired. So obviously, in the first stage of every acquisition that we do, the objective is to stabilize the asset. We don't buy necessarily very well-run assets. We buy with assets with some challenges. And hence, first stage, it is more about stabilizing the asset and making sure the customer is happy with the solutions that we are bringing onto that asset. It's the next stage, depending once it is stabilized, is when you look at growing that assets, diversifying that assets, and as a platform, given we are present in now 44 countries, it becomes relatively easy for us to start expanding the assets once it is stabilized. So different acquisitions will have its own trajectories and paths depending upon the problems with the asset and the issues that it carries. But that's generally the philosophy that we have. So hence we don't look at it from the perspective of saying what's the delta growth, so to say, on those assets. But as I said, if you look at just the acquired assets which we haven't assimilated as yet into our books, that itself is like a 14,500 crore number, which should ballpark be at least what we should be getting in the ensuing year at least, right? That's what we've highlighted. Yeah, and the rest is how the industry grows. And obviously, we are not happy with just a normal growth. We obviously have always done higher than market growth, and we hope to achieve that.
Fair point. Pankaj, you did talk about, some challenges still remaining on the international front as well. By when do you see things improving, green shoots emerging? Which are the geographies that continue to remain very, very challenging for you right now?
Well, and also before I come to this, one more area of growth which has been there for us are emerging businesses. So I will look at that. They are growing very well. They contributed nearly 8,000 crores, and we have had acquisitions on aerospace side and other things which are growing very, very fast. So as we have customers' trust in those areas, they want us to do better and want to expand our business in that light. In terms of the challenges, as we are present in nearly 44 countries today, there will always be some challenges. Yes, the challenges which are there today may be relating to logistics due to, the various warlike situations or war situations which have been there. So some sea routes are there which have been impacted. So there will be some impacts, and we try and find solutions to serve better and better to the customers. In a way, we are very well positioned because most of our facilities are located in the same geography where our customers are. So that really helped us that we could support our customers in a much better way than
Sure.
someone who is supplying from a very big distance.
Right. Kunal, on the margin front, could you guide what kind of band are you looking at? Especially why I ask you this is because there is a across the board surge in the commodity prices. How are you really looking at that panning out, and what does that do to the margins? And will you be able to pass on as well?
So number one, on the commodity side, interestingly enough, I think most of the commodities we would have a pass-through element to it. There might be a lag effect to it, but ultimately there is a pass-through element that goes along with it. So hence does not concern us as much. Two, I think to bear in mind, ours is a fairly well diversified business. So there will be some issues that will happen in some part of the world. Who knows what is going to happen? But because of our diversity, other parts pull up, and hence on an average, we still continue to do better and better. And then on the margin front, as I've always said again and again, please don't look at the percentage margin. Please track the absolute. And we hope that on an absolute front, we will still be improving every quarter that we come and talk to you about.
Okay. And could you also tell us on the leverage ratio, which has come in better than your own guidance as well? What really helped and what could be the outlook? Your gross debt also stands at around 17,351 crores. What's your plan on that front?
You're right. Look, I had highlighted the fact that we are on a deleveraging path, and we were aiming to get to somewhere in the 1.5 odd levels. We've got to 1.4, so clearly we have outperformed. I think some of the pieces that has helped is clearly the working capital has become a little bit more normalized. There is still some more to go, and hence we are still on a deleveraging path. I think if we do not do anything inorganic, which is an unlikely event, but nevertheless, right now, if we don't do anything inorganic, we should probably be somewhere in the one odd region, give or take, by the end of the year. So the organic side of the business, we still expect it to deliver and give us fair amount of cash flows to then reduce our debts.
Okay. Last question, Pankaj. Then the board has also approved raising of another 5,000 odd crore rupees through NCDs on a private placement basis. What are you planning to use this for now?
As of now, this is just an approval because, as you know, we are a growing organization, so it's better to keep the approvals in place. And also another thing which I would like to add is that based on the very disciplined approach which the company followed in terms of its financials, we also had positive rating actions. And Fitch has upgraded our senior secured bonds to investment grade, that's BBB minus, and also Moody's Ba1 rating, which is under review for upgrade. So those are also positive actions which are in place.
All right. I wish you both all the very best for the upcoming quarters. Thank you for speaking to us and detailing for us what worked for you in this quarter. And truly appreciate your time with us on Business Today.
Thank you very much.
Thank you. Thank you so
Thank
much.
you. Thank you so much. And with that, viewers, we wrap up this very special edition. But do stay tuned as Business Today continues to get you all the insights from the world of business.